All right, so what happens when we sell the real estate? How does this affect you? So in the last video, we talked about depreciation. A couple of things you have to be aware of. There is something called a depreciation recapture. So all the gains we've saved from depreciation, we do have to pay that back, calling it recapture tax. The beautiful thing though about real estate is that's capped at 25%, which is much better than the 37% you're being taxed at as a high income earner. Real estate's also considered capital gains, right? So if we hold it for longer than a year, it's taxed at capital gains. That's capped at 20%. And so again, you can see all this time, you haven't virtually been paying taxes on that income through the depreciation. So you're saving money there and you're being taxed at a much lower tax bracket because of capital gains, because of the way it's capped. So again, you think about all the gains that you're saving. So that's something to consider. You do have to pay that back, but you are being taxed at a much lower tax bracket. But here are a couple ways to avoid that altogether. One of them is called a refinance. So before we ever look to sell a deal, we may consider refinancing the deal at the new value. So once we create value in the project and we bought it at 10 million and now it's valued at 17 million, instead of selling the deal at 17, we might refinance the deal, put a new loan at the new value, and then pull that equity out and give that to investors. And those gains are taxed at 0%. So that's tax-free money that we can literally pull out of the deal, put back into our pockets, and still keep the asset while it's cash flowing. The other thing is called a 1031. Where we can actually roll all of our gains into a future property. That becomes a little bit difficult in a syndication because everyone has to be on board for that. There are other things called a DST where you can take your gains from a real estate syndication and put it into something called a DST. It's kind of like a 1031 and you can avoid capital gains that way as well. So there are actually other ways around not having to pay any taxes at the end as well, but something to be aware of what happens when we sell.